We have the NSE just below that psychological level of 4,000 points. And despite the dip backs we've been seeing, it seems like the mood is more positive than negative at this stage. What's your position on the markets at the moment, where stability seems to be the selling point for the Kenyan space?
Well, the Kenyan scene has been undergoing a lot of challenges, politics, high food prices, high energy prices, inflationary pressures, a lot of factors playing into the investment decision making. But currently what we are seeing is that there's some stability, there's some positive sentiment, there's some positive mood. We've seen on the political scene the Ocampo 6 went and came back. At least there's some stability around there. We're expecting the appointment of the Chief Justice. Currently there's not much tension in the political scenario. We've also seen central bank coming in to sort of tighten monetary policy to sort out inflation. We've seen a lot of foreign investors also getting attracted into our markets because of all these positive sentiments. Remember, markets about mood is about sentiments other than the number crunching.
It's also about value, and at this stage, having been hard hit, in the first quarter, we've had some of these stocks traders saying looking pretty undervalued at this stage of the game. Where are you seeing opportunity right now?
Well, the fourth quarter of 2010, there was a rally going on. But then come first quarter of this year, we saw a lot of profit taking as mainly banks releasing their financial results. So we saw some correction taking place. Now there's a lot of value going on, value being created rather in the industrial sector, looking at such stocks as Kenya Power and Lighting. Also in the banking sector, there are certain undervalued stocks like KCB. And probably in the commercial sector, KQ is also becoming quite attractive.
Let's hone in on that banking space, because the banks have been running with quite some momentum, and it seems like the positives come to no end when it comes to the banking sector in Kenya in terms of factors that are set to propel growth even further moving forward. We've seen a headline emerge today of a new model for banks, allowing them to offer limited services at outlets such as supermarkets and petrol stations as well, and that will help raise their revenues at a minimal cost. What are you making of the banks at this stage of the game and the kind of environment they're operating in, where innovation seems to be ongoing?
Well, there's a lot of competitive pressure for banks. I mean, Equity Bank revolutionized the banking sector in Kenya. So you're finding that banks have revamped their research, market product development departments, so as to be able to widen their market share, and at the same time cognizant of the fact that cost is an issue. So they're trying to ensure that they tap into unbanked segment of the population, but at the same time at a very cost-efficient, in a cost-efficient way. So that's why you don't see them going into the brick and mortar, the traditional brick and mortar strategy. They're looking for, they're basically leveraging on IT to be able to widen their distribution space.
Of course, we've got Equity Bank that immediately springs to mind as a player that will possibly take this new banking model on and run with it. Do you see other banks coming to the party as aggressively? Because we know in the past they've been pretty conservative when it comes to their approach to the unbanked sector.
I'll give you an example. A couple of years back, Barclays Bank decided to close its up-country branches. At that time, for them, that wasn't their target market, only to come back years later to reopen those same branches. So, of course, we'll see most of the competitors copying the same model, but at the same time, in the same sector, there are certain banks that have maintained their conservatism, the likes of Standard Chartered Bank.
Well, of course, as you mentioned earlier, KQ is another counter that's been standing in the spotlight. It was the day's top mover yesterday, up 5.34%, and that after it signed the deal with Boeing for new planes. Where to from here for KQ? Because also positive news flow around this counter, where earlier this week we were talking about its position when it comes to hedging on that fuel price, and that a hedging position it took last year at much lower levels on that oil price.
Well, for KQ, at least they've managed to contain fuel costs through the hedging facility. But of course, with the market movements, at times they tend to be, they tend to be out of the money. But with the fuel prices going upwards currently, you'll find that it's giving them some good gains.
Would you be a buyer in KQ at current levels? We've got that counter sitting at about 34 shillings 50 at this stage.
KQ
Putting you on the spot there.
KQ is a cyclical stock, Alishia. I think once growth tends to take root, I'll definitely be a buyer, because then you find a lot of increased economic activity. You find a lot of tourism. The tourism industry also expanding, local tourism demand, and at that point in time, I'll definitely be a buyer in KQ.